Hello everyone. Welcome to another episode of Expert Lounge podcast from India Ratings and Research. I am Hardik Gala, senior analyst from Corporate Ratings. Along with me, I have my colleague Kratika Nayak, senior analyst from Corporate Ratings. Today we are focusing on the latest India Ratings and Research insights to dive into a space that is becoming one of the strategic pillars of Indian pharma ecosystem. That is the CDMO and CRDMO sector. So Kratika, let's start with the big picture. CDMO companies witnessed a muted growth in FY26. What really drove the slowdown? And how should we look at this in the overall context of the sector?
Thanks, Hardik. This sector has seen an interesting mix of near term pressures and strong fundamentals. Revenue growth slowed down to single digit largely due to inventory destocking and some molecule attrition. CDMO revenues are inherently linked to product life cycles. So we saw some mature molecules volumes taper, while the ramp up from the newer contracts has been gradual, creating a transitory growth gap.
Got it. Given the recent slowdown driven by destocking and molecule attrition, how should we interpret the demand in the sector? And can we still say that the demand visibility remains intact despite this near term headwind?
Yeah, absolutely. Our demand visibility remains healthy, supported by improving biotech funding, stronger deal wins, particularly in late stage molecules, and deeper engagement with large pharma clients. To reiterate, the underlying demand environment remains intact. Structural drivers such as the China Plus One strategy continue to act as a meaningful tailwind for Indian CDMOs, while innovation pipelines, especially in specialty and complex chemistries, remain robust and supportive of long term growth.
Sure. Also, can you explain what is changing structurally in the CDMO space?
So, the space is evolving rapidly. Companies are moving into complex modalities such as antibody drug conjugates, known as ADCs, peptides, and oligonucleotides. There's also increasing investment in biologics and adoption of AI in the discovery process. These shifts are enhancing both capabilities and competitiveness.
Okay. And given the elevated capex and ongoing investments in the capacity and capabilities, are we seeing any pressure on balance sheets or have credit profiles remained resilient?
So, interestingly, credit profiles have strengthened. Despite high capital expenditure, companies have managed to improve cash flows and reduce debt. EBITDA margins have remained stable at around 20%, indicating resilience and profitability. Further, leverage has improved, with net leverage reducing to close to 1x in FY26, and we expect it to remain below 1.5x through FY27. And this highlights strong internal accrual generation and disciplined financial management.
That's a positive for Indian CDMO companies. So how are companies investing so heavily but yet maintaining balance sheet strength?
So the investments are being upfront and focused on advanced technologies and newer chemistries. And while this may temporarily dilute ROCE, it positions companies well for future growth.
Okay, lastly, what are your key takeaways and which key trends you anticipate to drive growth and performance for the sector over the next year?
So my key takeaways are that FY26 was a transitory year for CDMO, but the underlying structural drivers remain intact. And of course, there are near-term watch points, particularly around input costs, logistics pressures, and geopolitical uncertainty. But the underlying operating leverage and scale benefits should help cushion these risks. Looking ahead, FY27 is expected to be a phase of operational harvesting, where investments made over the past few years begin to translate into higher utilization, stronger revenue, and sustained credit strength.
Okay. Thank you for sharing your insights, Kratika. And thanks to our listeners for tuning in. For the further insights on the points discussed in our podcast, you can view our research published on www.indiaratings.co.in under the Research and Publication tab. And you can also reach out to us in case of any queries. Thank you.